Hey, everybody, welcome back for part two of Nelson's book, Becoming Your Own Banker, page 85 review. If you haven't listened to part one, we recommend go back and get that. Let's see, what did we do last week, Paul? We had a little live webinar, huh?
Yeah, had a live webinar. We're gonna, I think, continue to do those things again, folks. If you're a new listener, if you're a current listener, current client, feel free to invite your friends, people that you think might be interested in the infinite banking concept. It would be helpful if they read the book beforehand, or at least page 85.
There you go. And we'll cover the second half right now. Here we go. Hey, I'm Dave,
And I'm Paul.
and this is the Wealth Warehouse Podcast.
Number 4, when government creates a problem, parentheses, onerous taxation, and then turns around and grants you an exception to the problem they created, any tax qualified plan, aren't you just a little bit suspicious that you are being manipulated? Tax qualified retirement plans were all created under the guise of giving you a break. First, there were pension plans for corporate employees, and then came HR 10 plans for partners and sole proprietors, and finally, IRAs for individuals. Now everyone had an exception to the IRS code. If the government really wanted to give you a break, all they had to do is cut out the taxes. Do you really think they want to do that?
No, I don't.
Of course not. It's control, right? Like
Yep.
it's this, and I can't remember what percentage of our taxes actually go to like funding things, but
Almost nothing.
almost none of it
Yeah.
goes to service some of it. I guess it goes to service the uncontrollable national debt.
Yep. Yeah, and what else does, President Trump right now talks about eliminating the income tax. That's all well and good to talk about that and want that, but the executive doesn't have the authority to make that happen. It takes Congress.
Right.
And for Congress to do that, what they would effectively be doing is saying they are no longer allowed to spend money because they can't print money if there are no taxes. Because what do you think is guaranteeing all of that new money, all those new loans? It's the American taxpayer. So,
Correct.
not that we
You
don't
are
have tons of other taxes that we pay. I mean, that's why you might say, oh, I only paid an effective 20% tax rate on my income taxes. Congratulations. You still paid 50% of your income in taxes, most likely, or very close to 50% because of gasoline tax,
which
your
is
cell
hidden.
phone tax, everything.
That's right.
Inflation,
That's right.
the
Inflation, the hidden
tax.
tax.
Yeah.
The hidden tax. And I would say the gas tax is a hidden tax because it's not really, people really don't think about it. They just see $3.99 at the pump or $2.99, and that's just what they pay. They don't realize that 25 to 50 cents of that is state tax,
Yeah, on
or
the
maybe federal
sticker,
and state. I'm not sure.
on the pump here in Minnesota, the sticker actually says how much is federal. It's like maybe 22,
Oh,
and then how much is state tax. It's a total of like 47 cents per
yeah,
gallon that goes towards
yeah,
tax.
yeah. That's
If
supposed to
I
pay
fill
for
up
the
20
roads,
gallons, you're talking nearly $10 every time I fill up my truck is tax.
right?
Yep.
Yeah, and I think a lot of people, and these are good people, they just haven't really, I don't know, committed any brain power to this, but they're like, well, I want to pay my fair share. I'm like, don't worry, you are. Don't,
Yeah, don't worry,
like
you
you
are.
are.
Yeah. Yeah.
Yeah.
Yep, true. Now, really what Nelson is getting to is those who believe the government is there to help them and save them, and those who think otherwise, which I've seen to be probably the biggest delineator between people who realize IBC is a great way to get out of the system and create their own
Yes.
financing and their own
Yep.
banking system. Is their fundamental belief is that I don't want to rely on anybody else, the government. What instead, I want to create a private contract that's out of the purview of qualified plans, all of those ridiculous rules and restrictions they have on that stuff. They are taking responsibility for themselves, just like somebody who preps for emergencies instead of a hurricane coming through town or LA fires and then being like, I'm not going anywhere. I'm just waiting for somebody to come save me. Somebody come
Nope.
save me. No, you got to take care of yourself because nobody else cares about you when it comes to the government. Like the government does not care about you. Plain and simple.
Yeah, and it's those people that are prepared that built this country. People that went out and there was no social security. When we expanded west, right? There was none of that stuff to protect them. I mean, it was the wild wild west, literally. Like Iraq 2003, I imagine.
Yeah.
So, anyway, yeah, I think Nelson nails it, right? When he says the people that created the problem, onerous taxation, and also created the solution to it or the exception to it to help you, to quote, help you, you really, and I never thought about it like that. I just listened to my financial advisor in 2003, like, hey, you need a Roth IRA. Like, I need a Roth IRA.
Yeah.
You need to max out your TSP as much as possible. I need to max out. I mean, I put zero brain power into any of this. And that book was out, of course, then, but didn't know about it.
You know what this reminds me of? Do you remember way back in the day we were kids and one of the new kids on the block guys like lit a hotel on fire on
Right.
purpose and then went around telling everybody, get out of the hotel, get out of the hotel. And he was hailed as a hero until they discovered he's the one that started the fire in the first place. That's the exact same thing. That's what the government's doing. They're saying, we're going to create this fire and then we're going to come in and rescue you from it.
Right.
So, because we want to be the heroes. We're here for you.
Yeah. And then notice, though, for like most qualified plans, you can't, in the traditional types, you can't get to any of the money. Well, Paul, you can get to 50,000 or 50% of the account's value, whatever is, but not more. Yeah, I know that. I know all the rules. But what I'm saying is, like, we've brought up examples on this show of people having multiple six figures in a 401k, with a certain, this was actually with a certain airline. And he wanted to jumpstart his own business using the money that he'd saved. And
Yeah.
they were like, no, sorry.
Yeah,
And-
right.
So anyway, but we stepped in, right? 5 of us stepped in with capital and helped him launch that business.
Yeah. And it's still thriving as far as I know.
Yeah, people are
Still getting paid.
You're still getting paid. I'm the only one that
It's still going.
got
You've been paid
cashed out.
Yeah, I guess, yeah. But no, I'm still getting my regular monthly check.
Yeah.
Yeah.
Yeah, well, he's solid.
Yeah.
For sure. So.
Yep. Awesome. All right. Moving on. Number five, page 85. Wealth has got to reside somewhere. Where would you prefer to have it reside? Real estate? Then take a look around and see what happens when one needs liquidity. Real estate is very much a, quote, frozen asset. The stock market? Then try reading from my recommended reading for those interested in the stock market on page 91 in this book. Until you've done so, are you qualified to make an intelligent decision about such action? Or free contract with other free persons, parentheses, life insurance. From this base of financial operation, you can do any of the other things in life that you desire.
Yep.
Yeah. Love
Yep.
that.
I love it.
And that's how we treat it, right?
Yes.
This isn't the panacea, the end all be all, the silver bullet. This is the foundation. It's the foundational asset. It's the foundation upon which everything else happens.
Yep. And another way to look at it, this is simply where we put the majority of our money first. Aside from, I guess, living expenses that we just kind of transact monthly, all of our savings, all of our other capital that we're able to accumulate is paid in whole life insurance premium every year.
Yeah.
Right?
So really the difference between us and somebody who just invests their money without putting it here first is the first place their money goes is somebody else's bank. The
Yes.
first place my money goes is to my bank. And
That's
then
right.
I invest with it.
Yeah. And, this enables us to have multiple rates of return, if you will, right? We're earning money in multiple locations at the same time. But the other thing we're buying whole life insurance here, right? By solving our need for finance, by paying adequate premium relative to our income, we are also guaranteeing that somebody, if we're gonna prematurely graduate, let's say, and we have no idea. I mean, look what just happened at Ronald Reagan Airport the other night.
Yeah. Yeah.
Horrible, absolutely horrible. The airplane wasn't doing anything wrong. I think definitely pilot error
Well,
on
and
one
how
side of the
many
story
how
here.
many of those family members, the only money coming to them is going to be what they get from a lawsuit or a settlement from the airline?
And that can take
If that, yeah, it could take years, decades, perhaps.
right.
Like the Juan Valdez oil spill.
Oh,
Back
the
in
Exxon
day.
Valdez.
The Exxon Valdez. It took them 19 years to get a payment. Juan Valdez is it? Exxon
Isn't he-
Valdez.
Isn't Juan Valdez the dude on the horse?
He's the
with
coffee guy.
The guy. I don't know. It's so
Yeah.
old.
It is old. I mean, yeah, we're talking, what's that, 30 years ago? 40? 30,
Exxon
40
Valdez
years?
was what, 89?
Yeah, it was a long time ago. I remember it though.
Yeah.
But yeah, it took the residents of that town 19 years to get a payment from Exxon.
I was right. 1989. Look at
89.
that.
Well, a lot happened in
Trivia
89, man.
champion.
A lot
Yeah,
happened in 89, right?
it was quite a year.
Yeah.
Yeah.
So
Horrible.
I might have interrupted one of your thoughts, but
Well, that's okay because I don't remember what the heck I was talking about. But
well, I like the
we tried
examples.
putting our money there first.
Yep.
But yeah, I guess guaranteeing that somebody's going to receive our income because if you need time, you need insurance.
Yeah, my income doesn't have to stop after I'm gone.
That's right.
My responsibility is to provide for my family. Period. That's like one of the top responsibilities I have in my life is provide for my family. That doesn't mean that provision stops just because I'm no longer here.
Yeah, you know what, Dave? I think that's mantastic.
That's fantastic. Yeah. Do I want some other man jumping in right away, providing for my wife and kids? No. I want her single as long as possible.
That's right.
Not that she can't provide for herself; she can, but I'm a pretty good provider, and I want that to continue.
Yes.
But I like the examples he lists, like real estate.
Yeah, we work with a lot of real estate people, although a lot of you, and you're not listening anyway, you don't know anything about banking. You don't. Otherwise, that refi event, I would have gotten all my capital back. But you didn't anticipate Federal Reserve policy, or you didn't really. Anyway, it's so annoying. I get some
Yeah,
scar tissue from that. But
And what people might be thinking when they read this this part on page 85 is, oh, so Nelson thinks real estate's a bad investment? Not at all.
No.
He's just saying that's not where you want to put your capital. That's not where your capital should reside. It should not reside in the equity, the walls of your house or your houses. Because when you need that capital, it's not liquid. It's really not.
right.
He's talking about where that liquid capital, that access to capital for opportunities and emergencies, where does that reside? It shouldn't be residing in a non-liquid asset.
No, it baffles the mind. I'll go back to that one to the Dave Ramsey page where I've been posting a little bit more, and it blows people's minds when I tell them that I'll never pay off my house.
Oh, dude, that's sacrilege.
It is
That's blasphemy. What are you doing?
it is blasphemy. I must be the devil, right? But I was like, why should I pay it off? Like, let's say you have a $500,000 house, it's paid off, and maybe this works for some of you, but that's not going to work for me. I want to keep that 500 where I can get at it, and that to me that makes way more sense. And let's face it, if there's an emergency, nobody has a $1,000 emergency. It's going to be 5 figures. It might be a 6-figure emergency. Who knows? I want that money.
And guess what? Banks don't fund. They don't fund emergencies. If they have
Oh,
the
they don't?
slightest hint that you need that money for an emergency, they'll still make you go through the whole loan process just so they can gather your data and then tell you no.
Yeah, you had a client that had that happen, and I think I have too, for sure.
Yeah. With plenty of equity in his home and a great income and still got denied.
Yep. They don't care.
They don't care. Right. So, what I'm looking for is not maximum risk and minimal control. Like real estate, I think you have much more control
Yep.
and probably less risk than say the stock market, where you have no control. You can choose which stocks you want to invest in, but you have no control over that company, how they operate, whether the CEO does something illegal and the stock plummets or something like that, or whatever. And you're taking all the risk and you have no control. The reason we like dividend paying whole life insurance is we have maximum control and minimal risk. We've transferred all that risk to the insurance company.
Yeah, it's like almost the purpose of insurance. Oh wait,
Yeah. Yeah.
it's exactly
And which
the
is
purpose
why
of
it's
it.
the foundation, which is why it's on the base of everything we do. And as we go up that pyramid, we get to the top, that's where I'm going to take some risk, maybe, less control, more risk, because I've got the solid base of control, max control, and minimal risk.
Yeah, and I don't understand why people skip protection, or they think they have protection with the term, and then their term runs out in their 50s, maybe their 60s or something. And then all of a sudden they discover that they really still have a need for permanent death benefit and they don't have it,
Yeah.
right? I just, I wish I could flip a switch and just make people realize you can do everything you're doing now and have permanent whole life insurance all at the same time
Yep.
and have access to all your money. Like, I don't know. It's pretty simple.
There you
All
go.
right, is the last one me?
No, there's two more.
Oh, there's 2
You're
more.
on number 6.
Number 6. I keep getting the short ones. All right, number 6. This is one of the fundamental ideas of understanding the essence of the infinite banking concept, I think. And this is going to, if you're a pay cash person, listen up. All right, you finance everything you buy. You either pay interest to someone else or you give up interest you could have earned elsewhere. There are no exceptions. So opportunity cost, right? You have to consider the alternative use of your money. You paid cash for that used car that he told you to buy. Great. But now this opportunity over here is shut off to you, which was going to pay you 13% per year annual instead of the, you could have been paying 3% to the car finance company or 5% to the life insurance company if you use policy loan, whatever.
Yeah.
But you have to think about the alternate use of money all the time.
And that your money has a value.
No question.
Like you have to think about it like, I mean, if you save up cash and you go buy a vending machine and you start making all money on that vending machine, a lot of people would say, well, that's pure profit because the vending machine's paid off. Well, it's not pure profit because that money you use to buy that vending machine has an opportunity value, an economic value above the amount of money it is. It has the ability to earn more money. So it's not all profit. You have to compare it to what else you could have done with that money to earn a return elsewhere.
Correct. And that is why the strategic use of whole life insurance is great because I can access my capital, go do that deal over there, earn a profit on that deal, and my policy still grows exactly the same rate as it would have grown had I not leveraged the money anyway.
It grows uninterrupted.
Uninterrupted compound interest. It's the only place where this occurs, right? In a guaranteed manner, and then you get the non-guaranteed dividend on top of that. So, and Nelson points it out in the book. I don't have the page number off the top of my head, but he goes through like an investment example of how the person using the infinite banking concept and leveraging the cash value from his whole life policy, his overall rate of return on the deal is better because of where the money originated from. You
Right.
still have to factor in the growth of the policy.
Yeah, and oftentimes we don't. I just look at the ROI
Yeah.
where I take, my net profit over the cost of the investment.
Right.
And the only cost I had is the interest I have to pay
Interest.
the insurance company. That's it. That's
That's
the
right.
only cost to me. And that
Correct.
doesn't even include what I'm earning inside my policy through interest and dividends.
Correct. If you want to enhance your returns, and I think I heard Ryan say this years ago on their podcast. If you take two people, the person practicing IBC, all things being equal, same investment, same everything, will be ahead.
Yeah.
At some point, he will move ahead, and then eventually he will be light years ahead.
Yeah. At some point, it's not going to be immediately.
Not right away. No, don't care. I
I
could
don't
care
care.
less about the
Because,
temporary loss of liquidity by buying a whole life policy. I could care
yeah,
less.
I'm willing to do that, to do what others won't. So tomorrow I can do what others can't.
Yeah, I love that. And I'd add this. If liquidity is the thing holding you back from this, there are ways where we can design a policy where you maximize liquidity right out of the gate. It's not always the right thing to do, though. But in your particular circumstance, maybe it is, and we'll advise you appropriately.
And maybe it's possible. Yeah. But if liquidity is your most important thing right now, why are you putting your money somewhere that you can't touch it until you're nearly 60 years old?
I love that question. Dave and I were talking the other day. We know someone that has like several $100,000 in a 529. I've got some recent clients that have, $60,000 in a two 529 plans. That's more money than most people have in their retirement accounts.
Yeah.
Like,
Yeah. I don't know.
that is the single dumbest place to put money. I'm sorry. I'm gonna make this is gonna be a YouTube short. The 529 college savings plan is no. Let me start over. The college 529 savings plan is the dumbest place to put money.
Hands down. Yep.
Snip that out, Dave.
Yeah. Yeah. Our marketing expert who we're meeting with after this call. Yeah. Make a short on
And
it.
I would go on any show at any time and debate anybody on that. And I've owned those things.
Yeah. So have I.
Yep.
Not anymore though. I got rid of it.
What a dumb place to put money. Oh my goodness.
All right. Let's coming to the final point on page 85 of Becoming Your Own Banker. Number 7, your need for finance during your lifetime exceeds your need for life insurance protection. If you solve for your need for finance through life insurance cash values, you will end up with so much life insurance you can't get it past the underwriters. You will have to insure every person in which you have an insurable interest.
I love it. I
So
have
what
that
he's
last
saying-
part underlined.
Yeah, if you create your own system and you aren't afraid to capitalize and you prioritize capitalization and access to capital, the death benefit takes care of itself. You'll have more than you know what to do with.
Yes. And it's very safe for me to say this because it's 100% true. If you had taken the path that I was on before, right? And I owned whole life. I've owned whole life since 2003. Not the right kind necessarily. It's still good though. But if you had taken, that path alpha that I was on and now compare it to path Bravo, had the only thing I had changed was buying participating whole life insurance and adding it to my overall portfolio, the Bravo Plan B, Fougere strategy would have won in the end. Would have won. I've run the numbers. I've done the math actually, and
But that's
not
all you
only
did.
legacy but also just cash availability. I had very little liquidity when I was doing the old way.
Yeah.
So
But because you made those changes, Plan B turned into Plan C, which is even way superior because
Right.
you started thinking like a banker.
is the unseen advantages of practicing the infinite banking concept and putting your money where you can get at it. Right. And now we've done 20 private loans over the last 7 years, probably, when you count like real estate and private lending and just all these little things. And then
Yep.
branched off from that, my friends are now doing private loans with people that I linked them up with years ago. And I don't even know about it. They're just doing it. And it's great. So they're everyone's helping each other and the community's just expanding. And none of us were thinking like this 5-6 years ago.
And we can all do this without government involvement.
Nope.
So that's what, capitalism. You can contract with private persons, private entities, and create growth and opportunity for one another, and everybody wins. The person borrowing the money wins because they get to expand or start a business. Their customers win because now they have a product or service that, that's a quality one that they get to benefit from. And then the person lending the money wins because they put their money to work. Going back to the point number one, there's only two sources of income: people at work and money at work. So all of you listening are already at work as a person. Now it's time to put money at work.
Yeah, that's right. Yeah, and it's, that concept of creating the value first before you go do that other thing that one of your mentors has kind of taught you and taught us and other people. A lot of people are having that light bulb moment. I was like, that's exactly what we're doing here, right? We're creating a value first, right? And that value, we're able to access that value and go do whatever we want. Mm-hmm. What we were going to do anyway, we're still able to do. And I say that a million times on this podcast probably by now, but unlock your mind.
I can still do anything you can do.
Yes.
Yeah.
I just
Tell
make
me one thing I
multiple
can
rates
do
of
that
return.
you can do. Yeah, exactly.
Anything you can do, I can do better.
I knew that would come up. Yeah. All right,
Good.
man. Well, good lesson. Good episodes, because this is definitely a two-parter. So finishing up the second episode right now of this one. So hopefully everybody got something out of that, and hopefully you're going to get back in your book and just read page 85, read page 3 and 4. It'll take you 5 minutes to read page 85 and page 3 and 4. 4 is only half a page.
Yeah,
So-
maybe 5 minutes.
Maybe 5 minutes. Read it slow. I mean, you and I read it pretty slow going through
Yeah.
it. So read it slow and go over it a few times. You're going to get something out of it every single time.
Yes.
Yeah. All right, everybody. Hope you enjoyed. Have a great week. We'll talk to you next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.